Welcome now, stocks. I got a lot of requests to talk about the AMC stock, and I spent literally the whole weekend doing due diligence and fundamental and technical analysis to provide you with hours worth of information as we start this week's of trading. Now, a lot of people have been talking about why is the AMC stock down, and there's a lot of speculation talking about hedge funds and whatnot. Again, that's all BS, right? The reason why is because of the economic uncertainties that have plagued the market, especially with the new Omicron strain from Southern Africa. I'm going to give you some real fundamental analysis, so if you have a paper and pencil, please jot this down. All right. The Federal Reserve earlier last week changed their outlook on the market. Federal Chairman Jerome Powell, he believes that the word transitory should be retired now and no longer used. And that spooked the markets because now the Federal Reserve just did a complete U-turn on the market. And that is not good for growth stocks and, of course, meme stocks, which is what AMC sits under. Last month's CPI data concluded around 6.2%. This week, we will see the CPI data for last month's data analysis. Now, unfortunately, the most recent CPI data that we have hovers around 6.2%. Many are speculating that this week, the new CPI data from last month is going to come out even higher, which might even put growth stocks on a more negative downtrend. And again, what's interesting here, a lot of people are not talking about this, and this is important. Many people are focused on the stock market. They're focused on the day-to-day actions of the price, of the fluctuations of the NASDAQ, the Dow, and the S&P 500. But, from my experience, 10 years in the market, if you want to analyze the stock market, you got to analyze the bond market. What's interesting here is that the bond market doesn't believe that the federal chairman, Jerome Powell, is going to be increasing interest rates. Now, hear me out. Now, normally when interest rates increase, bond prices go down, making the yield go up because they would pay more because bonds are not as desirable when interest rates are high. However, if you analyze the bond yields in the past couple of days, as soon as the federal chairman, Jerome Powell, stated that he's going to retire the word transitory and most likely is going to have a more aggressive taper, the bond prices went up instead of going down. And if the bond prices go up, the yields go down, which is what we've been seeing, which means that the bond market is seeing something that the stock market isn't. The bond market is pricing something into the future, and that is a recession. But I do believe we are going to skirt a recession because think about it. When you have crazy fluctuations of inflation, a lot of businesses with unfortunately small profit margins, they start losing money because guess what? Now workers have to be paid more. And it's not like the workers are providing more value. It's just the things around them are getting more expensive. Like, for example, look at Nordstrom, the stock, JWN. Look at what happened to their sales. Their sales dropped because of these supply chain issues and the inflation that is beaming from that. But if you analyze something interesting here, the inventories of Nordstrom were up 13%. And I believe that we are slowly going to start to see a lot of inventory. What's interesting here is we're slowly starting to see inventory pileups in the automotive industry, in retail. And this is slowly going to become a problem in 2022 and beyond, to a point where value stocks are going to become value traps. You see, I actually do believe inflation is transitory because if you go ahead and analyze lumber prices, iron and copper, they all have started to decrease. So you may be asking yourself, why are we talking about iron and copper and lumber? The thing is, these are all related to the economic movements of our global economy. And by analyzing that, you can have a more comprehensive understanding of where the stock market's headed. Because if we get a stock market crash, as what we've been seeing in the growth sector, stocks that do not have great fundamentals, we can see that the stock market has been pricing them negatively. By understanding that and injecting it with an understanding of technical analysis, you'll have a great fundamental understanding of where the market's headed. Personally, I believe the Feds are stuck between a rock and a hard place. We have supply chain issues which are going to extend into 2022. However, they are going to show signs of clearing up. The problem is the jobs report just came back and it was terrible. We were expecting 500,000 jobs to be added, but we only added around 200,000. If this Omicron variant closes off the economy, especially with Germany locking down, and if this does cause a problem within the economy as a global compartment, we might actually see Feds may have to stand off of the aggressive taper that they signaled last week. In fact, interest rates may remain at a historic low. The market is definitely pricing for that. But check this out. If the Feds do increase interest rates, we are headed towards a recession. The beautiful part about this, it is short-lived. With the advent of technology, a lot of businesses that employ artificial intelligence are going to see profit margins like we haven't seen with value stocks. So moving on, I want you to write down this date. December 14 and 15 is when the federal chairman Jerome Powell, along with all of the Federal Reserves of the United States of America, are going to come together and they're going to vote on where the global economy is headed. This is a very crucial time point, because we are going to see whether or not they are going to increase their taper aggressively. And in the short term, we might suffer a taper tantrum. And I'll make another video regarding what that is. But understand that if the federal chairman, Jerome Powell, does start to taper more aggressively, that means the market is going to price in an interest rate hike, even possibly two, in the year of 2022, which counteracts what Jerome Powell said on doing an increased rate hike in 2023. So you can see there's a lot of uncertainties in the market, especially in China. With the whole Evergrande situation, looks like there might be some payment defaults, and a lot of the media sources are not talking about this, which I don't understand why, but these affect the market as a whole. Now, if you like this analysis, in the description box below and in the comment sections, I have a Mastering Stock Market course that's currently in beta access, 87% off, which includes my intrinsic value calculator, which finds the value of stocks, my lessons that I'm adding on and currently creating regarding how to evaluate a company utilizing technical and fundamental analysis, with my private Discord channel, exclusive daily briefings, price targets, and watch list, with 24 access to my 10 years of experience in the stock market. Now, I would like to move on to the margin maintenance. See, a lot of individuals are currently being wiped out on margin. Luckily, because of the stabilization of AMC, Robinhood has an approximate margin maintenance of around 25%. However, if the stock price does experience some volatility, understand that they might change that and alter that. And a lot of people have experienced that, especially in the Clover Health community and other meme stocks, which I don't really think Clover is a meme stock because it's fundamentally sounding. So make sure you are playing with money you can afford to lose, or money that is not going to be used for rent or something important. In fact, 10% of my portfolio is allocated for speculative plays, almost like a gamble. Understand though, this stock is different. So now we're going to shift gears and talk about the technical analysis before we run through our bear and bull case scenarios. This is the 4-hour 180-day chart. Now, a lot of people tend to overcomplicate technical analysis, but it's really easy. Anybody can do it. First things first, I want you to take a look at this resistance line that I drew here. This was back before the rally up to $77. The resistance is around $25.64. And if we plot this resistance, on Friday, it literally bounced off of approximately around that resistance and was able to rally back to $29. As you can see right here on the 1-minute chart, literally, and this is the same red line that you saw me draw on the 4-hour chart. It came in and it bounced right back up. That's why it's important to draw resistance lines and follow up on them. Another resistance line to analyze. Now, if, for example, the $25 resistant line here in red breaks, the second one would be around $17.84, as you can see right here. Furthermore, if this bounce is sufficient and the market starts to heal up and tax loss harvesting and all the economic uncertainties I told you about fade away with the CPI data reporting this week, we could see the trend line bounce off of this and continuously form a positive channel up until the next resistance, which I didn't draw here, but it is around $48. Now, if you look at the RSI indicator, the relative strength index, we are hovering near 30, which is an oversold territory. Furthermore, MACD looks like it might be curling up. However, this could be a fake out. And understand that the next resistance line, if it passes $25, it might consolidate, but if it passes, it might hit the $17.84. Now, I want to take you to the 1-minute time chart. As you can see on Friday, the AMC stock dropped. However, it did respect the technical analysis VWAP and the $25 support that we drew, as you saw in the 4-hour and 180-day. What's interesting here is as it passed the 180-day directional SMA line, this thick red line, you could see the volume started it to pick up significantly. A lot of momentum traders, they tend to use this as a guidance of when the price action will fluctuate. Now, I speculate that the price action could bounce off and hover between the $29 to around the $27 region, or it could drop as we discussed earlier. But as you can see right now, if you remember this pink channel that I drew here, this is the channel that we're in right now. And if everything goes as planned, then we might actually see a slow but steady increase in this positive channel. Another thing I would like to discuss here is the ortex data. As you can see in green, the days to cover ratio is hovering around 2.01. Again, the higher this goes, the more likely a short squeeze could happen. Another interesting part is the estimated short interest of free float is hovering around 17.16, with the current around 17.56. You can see it's slowly descending up, and the higher it goes, the more likely we might actually start seeing another rally, and then it might dip again. Thus, as you can see from a technical analysis and short interest perspective, the odds for success are lining up to the favor of the shareholder. However, with the economic uncertainties that I laid out, we might see a breakage of the $25 support line. And if so, we might see $17.84. However, this might be an opportunity to buy in, because I assume when AMC was hovering around the $19 before it took off, many people were like, oh man, is it too late to buy? And this could pose another opportunity for a future short squeeze. Again, if the ape nation and shareholders continue to hold. So now that we talked about the technical analysis, let's shift gears to talk about our bull and bear case scenarios. You see, recently the stock market has been suffering tax loss harvesting. Now, if you're new to the stock market, this is an historic thing. It's been around for 40, 50 years. Usually around January and February, the stock market rallies tremendously because all the money managers that pulled out of their losing stocks repurchased their old stocks at a lower price. But with this whole short squeeze and new retail investors coming in, we might see a bigger than normal January boost, as what we saw in early of 2021. Now, a lot of people on Twitter have been talking about the inverse relationship between the Bitcoin price falling and AMC rally. I'm going to be putting my citation to respect the author of the tweet up here. But what's interesting here is that patterns can repeat themselves, but they don't have to. So understand that. But best believe that if many people believe in this, it can become a self-fulfilling prophecy. From my personal 10 years of experience, and again, I'm not a financial advisor, this is just my personal opinion. These are all just speculations and they could not happen. So just understand that and only play with money that you can afford to lose. So please be careful. Another thing that I'm analyzing is that AMC's subscription service has definitely done really well, especially during the times we are in with the whole Disney Plus and Netflix and all the other stay-at-home theatrical things that are available for consumers nowadays. With the Spider-Man movie coming out, these are all great catalysts for the AMC stock. Another thing is people are talking about the dividends. Now, I believe they should not pay dividends because they should use that money to pay down their debt. See, check this out. If they pay down their debt and work on their fundamentals, and as long as shareholders hold the stock, if they pay down their debt, there's a possibility of them being included in the S&P 500. And imagine the catalyst that'll come off of that when everyone else would start investing in the AMC stock. The best thing AMC can do right now is work on its balance sheet to get more fundamental investors to pile in on the stock. That would make the stock's fundamentals golden, especially when their debt to equity ratio decreases and their current ratio satisfies what value investors are looking for. Another thing I want my lovely subscribers to know is that GameStop's earnings are this Wednesday after close. Now, these bad boy stocks tend to flock together. So if GameStop does well or whatnot, that right there could add a potential catalyst for AMC. I want my audience to be aware of this. You see, hedge funds don't want the AMC stock price to fall down hard. Now, you might be like, what? That doesn't make sense. If the AMC stock right now drops to $10 right now, what's going to happen? Wall Street Bets community, the whole Ape Nation community, even Clover Health community, they are all going to pile in on that stock. Hedge funds want to do is they want to slowly bleed the stock so retail loses interest. I speculate there might be a fake pump or a couple of fake pumps before the ultimate squeeze that a lot of shareholders are wanting to see in the company. Now, going a little bit into the September quarterly reports, AMC posted a loss of 44 cents per share, beating analyst estimates of 53-cent loss per share. Revenue is set to hit $5.3 billion in 2023. However, losses are expected to go beyond that, which is why AMC should focus focus down on paying down their debt. And instead of giving a dividend, which I know movie stocks do that, they should reward shareholders by reinvesting in their company, making it the best movie theater chain that we've ever seen. The positive side of paying down your debt helps with your credit rating. Now, unfortunately, AMC's credit rating is hovering around junk bond territory at around CCC+, which I talk about in my course on how to find those and what they mean. But if AMC can pay down their debt and increase their credit rating, that right there will help bring more value into the company, and it helps them most definitely to be added in the S&P 500. If their fundamentals are sounding, we're going to see some golden opportunities and nuggets in the AMC stock, I believe, by 2025. Now, if you made it this far, consider liking, subscribing, and turning on all notifications. It is my highest privilege and honor to serve you. Now, if you enjoyed my analysis, consider purchasing my Mastering Stock Market course, linked down in the description box and in the pinned comment sections. The course includes my DCF calculator, which finds the intrinsic value of stocks, lessons that I'm currently uploading regarding the technical and fundamental analysis on how to evaluate a company, breaking it down, short squeeze indicators, how to analyze micro and macroeconomic data. The course also includes a private Discord channel with my exclusive daily briefings, price targets, watch lists, and 24/7 access to my 10 years of experience in the stock market. Please stay safe during these uncertain times. God bless you, and I'll see you on the next one.